But the idea was not to make money. The idea was to train my mind to think that I want 100% debt.
We're talking about debt that's paid by a tenant.
Yeah.
Debt that's paid off by somebody else.
I signed up for a little real estate course. I've told this story before I get tired of listening to myself. It was $385. It was 3 days. That was the start. So I signed up, signed my name, sat down on the course. 3 days later, at the end of the course, he was a great instructor because he was a real estate investor. He didn't need the money. And that's when you know the guy is real, because you could tell he didn't need the money. He liked teaching. He liked inspiring people. So it's just like my rich dad. He says, you don't need them. So then the next thing he said at the end of the program, he says, when you leave this program, it's 3 days, Friday, Saturday, Sunday, he says, your education begins now. What you do at the end, as Kenny says, you get through the process of the 3 days and you start again. So he says, when you end Monday morning, your job is to look at 100 properties. 100 properties in 90 days. Take everything I've taught you and look at 100 properties. That was the start. So naturally, 30 guys in the class, they all say, okay, yeah, we all break into little teams. And as you know, by Tuesday, they all quit because they're too busy. They've gotten to the school, they didn't start here again. But there's 3 or 4 other guys, and we stayed through it, went to real estate agents, went through the little files. It was really antiquated ways of MLS, multiple listing services. We were looking for little dinky deals, small deals, because that's all we could afford. We didn't have any money. So we kept looking, I go knocking on doors at real estate agents, and realtors, they're not the best investors, are they?
No. They're all focused on commissions, normally.
I go knocking on the doors, and the first thing they say to me, can't do that here. This is Hawaii. You can do that in mainland, in California, Nebraska, but you can't do it here in Hawaii. And that's one of the first things my advisor said, is that's what losers will tell you. You can't do that here. Look, somebody is doing it here. It may not be the real estate agent, but it might be you. So I knocked on the doors, we'd find these deals, we had to go look at them, and we had to write down, it was a 3-bedroom bath, 65, back then it was $65,000, was a lot of money in Hawaii. Now they're $4 million. And so at the end of 90 days, we had 100 of these. And it was day and night. We just kept going until we got it done. And that was the process.
That's right.
At the end of the process, I'd gone through 100 deals, and it was like, wow, I learned more going through the process, talking to real estate agents, knocking on doors, looking at different properties, and finally, I was desperate. This guy says, well, I got what you're looking for on the island of Maui. Now, most people think Maui is too expensive. How can that be? How can Maui be affordable? But that's your block. So I flew over to Maui, little 1-bedroom, 1-bath, a condo, right in Kaanapali, the richest place on earth. Little 1-bedroom, 1-bath condo for $18,000. Holy mackerel. But the deal was I could not use any of my money. That was, the advisor said, I'm going to teach you so you'll never need to use your money again. If you can raise capital, you'll always be a rich man. So I go to this little $18,000 unit, the price on it, how much do I put down? He says $2,000 or $1,800. 10% down. It was a foreclosure. I broke up my credit card, and I had no money in the deal, and I made $25 a month. No money in the deal, $25 a month. And my brain went, it shook. I went, oh my God, I'll never need money again. I can never say I can't afford it. And I can never say I can't do it. That's how I got started. And we still make millions of dollars. When the market crashed, we made even more. But the process is the same. 1-bedroom, 1-bath, but you have to learn the process.
As a matter of fact, if you think about it, the whole system is designed to use bank financing. I mean, all these people that are working so hard are actually putting all their money into the bank. Well, those deposits are a liability. They're an expense to the bank. So if you put money in the bank, expense to the bank because they have to pay you interest.
I have 100% debt. My first property, $18,000. I put $2,000 down with a credit card, and I was making $25 a month.
I think that's the best example, Robert, because essentially what you did was you didn't use any of your own money. So the only costs that you had was whatever your debt was and whatever it cost the $1,800 on your credit card was.
Right. But the idea was not to make money. The idea was to train my mind to think that I want 100% debt. Most people, I want to get out of debt. I want to get out of debt. I want to get out of debt. And what we're saying here is the debt pays all your expenses and gives you some income. That's really as simple as it gets. So if I have no money in the deal and making $25, what is my return on investment?
It's infinite. You basically have no investment and you're making $25 a month. The reason why we want so much debt is because if I'm borrowing right now, I'm borrowing at say 4 or 4.5%, and inflation is say 4.5%. Then I'm using basically your money, pension fund,
mutual funds,
savings, insurance, savings. I'm using your money to hedge inflation and buying assets. So that's how the system works, and that's how the wealthy get really wealthy.
You see, the best thing about doing those 100 deals is I was learning to think about debt is good. As long as you have in your mind that debt is bad, I want to use my equity, your ROI goes down.
That's a good point. And there is bad debt, of course. Bad debt would be credit card debt.
Or if it was costing me $25.
Exactly right. There's definitely debt that you don't want to get into. We're talking about debt that's paid by a tenant. Debt that's paid off by somebody else. So that's a really important point. So if you're borrowing money, you're going to want to make sure that you have the rent to cover it.
If I hadn't done this myself, I would not understand what Kenny said.
It was a 144 unit property that was existing. It was 95% occupied with tenants. So that was an important piece. And then next door it had another 10 acres. And so the deal was that I was going to build a second phase on the 10 acres. And then we were going to have one property that was 256 units. And so that's what we did. So we took the first 144 units and the land, and we went and we got a construction loan to build the second phase. And then through good management, we filled up the property. And then we went back to the bank and we refinanced the whole project and got one loan on it. So we used debt to build it. We used debt to take out that construction debt.
We had this property and it was pumping about $300,000. So Kim and I, every year, were receiving $300,000
in cash flow from the tenants.
Income, most of it tax-free because of depreciation and all that. All those things you have to learn. So $300,000 for most people is a lot of money. The problem was Kim and I had $1 million in it, right? $1 million equity in it. So what Kenny did when he refinanced it, he gave us our $1 million back. So Kim and I got all of our $1 million back
through a refinance,
and we still have this. So we were receiving $300,000 with no money into a deal. To me, that's a great deal.
People might ask how. So there's a lot of things that happen inside of here. One was that this was over a 5 or 6 year period. The rents had gone up. We had increased the value. And during that time, interest rates went down. If you remember, I think we borrowed the original at somewhere around 7%, and then we refinanced somewhere around 5%. So we actually saved on the interest rate of the loan. So what we had was we had a property that was worth a lot more, and it still cash flowed very close to what it cash flowed before, and we got the $1 million out. And the $1 million was tax-free because it's a refinance. So when you pull money out, when you put a new loan over an old loan and you pull that money out, that's tax-free.
So with that $1 million, we gave it back to Kenny. Another deal, same process, goes out, and now it's huge.
It's what we call the velocity of money. So now at that point, Robert and Kim were still in the deal. It was still cash flowing, and then that $1 million was also at work somewhere else.
And so I'm not saying it's easy and all that, but again, it starts as a process.
And it's funny, people ask, because now, of course, Edgewood is infinite. There's no investment in the property, and it produces a great deal of cash flow every year.
And you're raising the rents, right?
That's right. Yeah, we're raising the rents, especially now in this market. But now people come to us and say, do you want to sell? And the question is why would we? Because it's producing all this cash flow and we have no investment. So all it would do is create a taxable event.
We don't want the money, if you understand that.
Right. Yes, there's millions of dollars in equity in the project, but we're not interested in that. We're interested in the cash flow. It's a big difference in the way.
So I want you all to understand, and if you don't start, you don't go through the process. Oftentimes talk about it is when I went to flight school in Florida, I couldn't fly, entered here, came out a pilot. That's the process. But if you don't go through the process, you stay here. The most important thing is how we think. I'll give you one more thing where it takes absolutely no money, or it does take some money, but it does thinking. About 15 years ago, I wanted to have a little ranch. And Kim says, why? Ranches don't cash flow.
Yeah.
So I said to Kim, well, if I can get a ranch for free, would you be happy? And she says, show me.
Yeah.
The point here is this, it's only up here. So I went wandering around all over the Southwest and Tombstone and Bisbee, Arizona. I'm looking for a property I can get for free. That was a challenge. She said, you can have as much land as you like as long as it's free, because it doesn't cash flow. It was 80 acres in Bisbee, Arizona, So I walked up to it, I was looking at the property. I knew it because it was beautiful property. It was tall mountains, oak trees all over it, a little stream running through it and all this. And the problem was it was $115,000. There's no property, there's nothing, no improvement, no building on it, except for there was a little road